Pepe's recent resurgence above 0.0001 for $5 has reignited wild forecasts, with some chartists even daring to suggest a breathtaking 40-fold rally if a key technical pattern holds true. At the heart of that bullish scenario is CryptoElites' rounding bottom count, which maps 3 successive accumulation zones within parallel trend channels. Each prior bottom gave way to a dramatic parabolic rip higher, and now, according to this structural view, Pep sits atop a third base ready for launch. The Fibonacci measured move target for a confirmed breakout from this cup and handle-like formation sits near $0.000399, roughly 40.64x today's levels. Such a move would put Pepe in rarefied parabolic territory, rivaling some of the greatest crypto blow-offs in 2021's token mania. Yet for every story of speculative glory, there's an equal measure of caution. Parabolas that go vertical can collapse just as fast, and a single pump and dump or whale cash out can vaporize the stratospheric returns many imagine as inevitable. Overlaying that eccentric bottom study is ZAYK, charts his analysis of a symmetric triangle that's quietly constricted PEP's trading range since December 2023. ZAYK points out that in recent days, Pepe decisively pierced the upper trend line on elevated volume with 3 consecutive green daily candles confirming the breakout's legitimacy. A textbook measured move from a symmetric triangle often equals the height of the base here, implying a potential 100 to 120% swing from the breakout point around $0.0000137, targeting roughly $0.000031. That more conservative projection still offers a compelling double from current prices, though it stands in stark contrast to the 40x thesis. The triangle's breakout suggests that near-term momentum favors bulls. However, failed triangles can flip into bear traps, luring in buyers before reversing back into the pattern and draining liquidity. Traders who chase without proper stops risk being caught on the wrong side if volume fizzles and sellers reassert control, further fueling Pepe's bullish narrative. Is the recent activity of whale trader James Wynn, known on-chain as a high-conviction player. Wynn reportedly opened a 10x leveraged long of 824 million Pepe over $680,000 in notional value, alongside substantial ETH positions. His unrealized gains, now approaching $800,000, stand as a public endorsement of Pepe's short-term upside, and whales often sway retail sentiment in their wake. Yet leverage is a double-edged sword. If Pepe dips even 10% from these levels, Wynn's 10x position could face harsh margin calls or liquidation, amplifying downside cascades. Retail traders that mirror such leveraged plays without equivalent risk controls may quickly find themselves on the sharp end. The liquidation cascade. Context for these micro-patterns emerges from the broader altcoin landscape. Analyst Mustache has flagged total 3 market cap excluding BTC and ETH as breaking a multi-year consolidation that ran from 2022 through 2024, a structure that mirrors prior breakout cycles in 2018 and 2021 that indexes transition into a parabolic trajectory often heralds spirited runs in high beta coins like memecoins, suggesting capital is rotating toward speculative assets. Within this framework, Pep's breakout aligns with a nascent altcoin season, where volatility and momentum amplify returns and risks across the board. However, historical alt seasons have ended in protracted crypto winters, and participation in these cycles without exit plans has ruined many a trader. A downturn in Total 3 could quickly erode the broader meme sentiment, leaving Pepe stranded without a market tailwind. Beyond structure and sentiment, fundamentals or lack thereof also matter. Pepe's primary draw is community fervor, not protocol upgrades or real use cases. Unlike Layer 1 blockchains that attract developers and real value, memecoins hinge on hype, social media narratives, and token supply dynamics. If the community's attention shifts or a rival memecoin commands bigger rallies, Pepe could lose its luster regardless of technical setups. Conversely, an orchestrated marketing push, celebrity endorsements, or exchange listings could trigger a self-fulfilling boom that outpaces any logical valuation, driving the token well beyond chart-based targets before a sudden collapse. On-chain liquidity is another crucial factor. CryptoElites' 40x model presumes sufficient depth and bid support to absorb gargantuan market orders. Yet order book liquidity for Pepe is often shallow. Large sell orders near nominal resistance. Levels can overwhelm taps and spark sharp flash crashes. A true 40x run would require substantial new capital and sustained buyer appetite, likely from both retail rockets and institutional hipsters. If liquidity swings fade and hodlers turn into sellers, even minor corrections could cascade into significant drawdowns. Shading technical breakouts with the real risk of slippage and front-running, time horizon also makes a material difference. CryptoElites' 40x scenario offers the potential for life-changing returns, but over what timeline? Parabolic runs seldom occur overnight. Building technical and social momentum can take weeks or months, during which external variables like macroeconomic conditions or regulatory headlines can intrude. ZAYK's more modest 100 to 120% projection may play out over days or weeks, catering to short-term momentum traders. Those seeking the 40x windfall must withstand prolonged volatility, patience, tests, and the emotional roller coaster of periodic pullbacks that punctuate even the steepest uptrends. Risk management in this environment is paramount. Traders drawn to Pepe's potential upside should consider scaling positions, taking partial profits at predefined levels, and using stop-loss orders to contain downside, particularly beneath breakout values of $0.000137 or the rounding bottom support. Trendline. Those wielding leverage must be mindful of funding rate levels, margin requirements, and the prospect of liquidation if the market retraces sharply. Meanwhile, diversified portfolios should limit memecoin exposure to a small allocation, acknowledging that risk-reward profiles differ drastically from more mature digital assets. Institutional players and regulated products also bear watching. The rise of crypto derivatives, desks, and memecoin-focused funds could funnel professional capital into tokens like Pepe, adding a veneer of legitimacy to its price action, but also introducing organized redemptions if funding dries up or profit targets are met. If these intermediaries exit positions en masse, memecoin charts can flip upside down in seconds. As algorithmic liquidity algorithms rebalance, ultimately, whether Pepe can truly explode 40x hinges on the alignment of community, hype cycles, breakout validation, broader altcoin momentum, and macro liquidity conditions. The convergence of a rounding bottom pattern, symmetric triangle breakout, whale conviction, and a macro alt season narrative creates a compelling mosaic that, if intact, might propel Pepe to unprecedented heights. Yet for every technical nuance pointing toward a moonshot, there lies a counterbalancing risk: deleveraging, lack of real-world utility, shallow liquidity, and sudden sentiment shifts. In the end, while the charts whisper of a potential 40-fold upside, traders and investors must navigate these murky waters with equal parts optimism and disciplined caution, recognizing that in the high-voltage world of memecoins, outsized gains come tethered to outsized risks.